Hey folks, Dan Frio here, the rate update. Today is October 6th, 2020. If you got your money in stocks, you're not happy today. If you got your money in your house and you're looking to refinance or buy a house and you're watching mortgage rates with me, you're gonna be happy. Don't go away. Hey folks, Dan Frio. Today, President Trump came out and said, I think we're just going to hold off on this stimulus package till after the election. That shocked the waves through the stock market. Again, as we watch this every day, bad news in the economy, in the world, is great news for bonds, great news for mortgage rates. So he came out and said, I think we're just going to delay all these talks till after the election and then see where it goes from here. That shocked the markets. Dow's down almost 400 points, but the MBS has rallied. And we got back pretty much everything we lost yesterday. If you watched me yesterday, I didn't lock because I basically said I think it's an overreaction of where things went between President Trump with COVID and all this other stuff. There was a knee-jerk reaction. I didn't lock anybody. And so today, I didn't think we'd come back this strong, but we did. So let's get to it. Let's see where we are today and where this is heading. So as you can see, President Trump came out and it's headlines all over the news. So one party's going to say it's fantastic. Other party's saying, oh, look what he's doing again. He's holding everything hostage. Guys, it's the political season. So no matter who does what or what does where, the other, they can't agree on what color the sky is. One says it's, polka dots and the other says it's pink. None of them are even close. So let's get on to what really happened today. People follow me every day. They follow the mortgage-backed securities market. They let me do that for them. Why do we follow this number? If you watch me every day, you're like, okay, I get it, Dan, get on with it. But those newbies, we want to educate them a little bit because the whole gist of the channel is to educate you guys. Hopefully you have confidence in me that I can take care of you, I can help you, and I have your best interest in mind. If not, you get something out of it. I have a lot of feedback I even have now traders on Wall Street calling me and emailing me saying, Dan, great educational channel. I love the direction that you're taking. If you can educate people, I think they're going to find credibility in that. And that's what we're doing. And we've been blessed because the phones are ringing off the hook. So let's get on to it. We follow this number right here. This is what's happening to the price of mortgage-backed securities. It's a bond that trades on Wall Street that is the biggest determinant of what's going on with mortgage rates. I'm going to make this as simple as I can. When the number is green, it's good. We like green. Green like money and green like whatever else. Trees, when the trees are blossoming. Now you're in Chicago and everything's starting to die. So green's good. Green means the price of the bonds are going up, thus driving down the yields. So the more you pay for a bond, the more the price goes up, the lower the yield that you get on that bond. I'll explain that in a second. Red is bad. Red's bad. That means prices are going down, rates are going up. So the best way I can explain this, let's make it in the simplest terms. A bond. It's an investment that you pay a certain amount now, and down the road you get whatever the bond face value is. So let's make it simple. Let's say the face value is $100. Well, today, and that's a year from now, you'll get $100. So today, if I have to buy that bond for $50, I give you $50 today. A year from now, you're going to give me $100 back. I doubled my money. That's 100% return. So that yield or the rate is 100%. However, if I give you $100 today, and a year from now you give me my $100 back, what was my gain? Zero. So the rate on that, or the interest rate or rate of return, is zero. I hope you get it. So that being said, we love when the price of the bonds go up. Okay? So it was up 23 today. So let's see basically a review of the markets. So you're going to see that I say, and I have no problem with you going back in time and watching my previous videos, because you could say, Dan, you said this, you said that, you contradicted yourself there. Please, if I contradict myself, let me know. I try not to. I try to give this educational every day. So I did say yesterday we are trading in a range, and that range is right about here. Okay? We went below it yesterday. We were above it for our time being. We're right back in that range right now. And I can see we're going to stagnate and stay right in this range. I thought this was too big of a move, too fast. I thought we were going to come back in this realm, but we dropped fast yesterday, and we basically picked it back up right now. So we're right here right now, okay, where the top of the green ended. So I think we're they moved a little bit too much. So I'm going to see how the market's open tomorrow. I might be locking people because every day we've hit a resistance line. There's resistance lines right here. You'll see these red lines. There's a line here and a line down here. I don't know if this one's going to be on your screen. These are what they call Fibonacci levels. These are guidelines, or let's say they're bumpers. When you're playing bowling with your little one, you put bumpers up so the ball can go doing, doing, doing and bounce all over the place. But they stay in this realm. Basically, that's what this is doing. These lines here, they're Fibonacci levels. So long term, we're going to bounce between this huge range right here. And the reason being is way back here, we hit a bottom. But I'm not going to go scroll that far back. So short term, though, we're in these ranges right here. And you're seeing us trade in that tight range for quite some time right now. The Federal Reserve is doing a fantastic job of keeping stability there. So that being said, we had a resistance level. This Fibonacci line, it's a short-term ceiling. We kept hitting it. Look, we hit it here. We hit it here, 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 here. Where are we going to break out? Are we going to break out above? And to break out above, again, remember, going up is lower rates. Or are we going to break through the bottom? We have some resistance levels here, so we can go all the way down here until we hit some resistance. So if you're looking at this, we have more of a chance of it going down here than it going any further up. So I'm betting that we're going to hit resistance levels again here, especially if this the news in the headlines, the stimulus package, does not go through. I think we're gonna re-enter these areas right here. So if I see us close or open tomorrow a little bit low, I'm probably going to jump in and start locking some people. Okay, so hopefully that makes sense to you. The market update: the Dow's down 375. The biggest input of the day is the stimulus package. That is basically where the markets were anticipating it. We'll wait to see what happens there. One thing that came out that's inflationary is, and you might hear me if you go back to a lot of videos I did, I watched logistics, the shipping indexes. The shipping indexes have doubled recently. That is going to push up prices, because if you're selling goods and services and it's costing you twice as much to ship your goods and services, you have to make up that somehow, some way. So it's going to push up prices in the market. So we're going to see some headwinds in inflation coming. That's bad for bonds. But between that, the election, everything else, I don't really see that that's going to play a major impact. The next thing is economic news coming out tomorrow. The FOMC is coming out with their minutes. That's the Federal Reserve. They're going to tell us what they discussed and if there's any policy changes there. There's basically a zero I won't say a zero chance. Nobody is anticipating any moves there. Okay, so I always show this each day too. What happened to the day? Again, I don't get this, but I'm going to show it to you every day. They're saying this index is coming out saying rates are 1 basis point higher than we were yesterday. Well, how can that be if MBSs are up 23? So I'm going to keep continuing to show this and monitor this, because this does give us an idea of where average rates are. Okay, so you look at these and say the 30-year conforming rate is around 2.9. The 30-year jumbo is about 3. FHA is 2.99. VA is 2.57. Their rates, or your rates, are going to be, this is the average. So you're going to have rates maybe a little bit lower than that, and you're going to have rates higher than that because of risk adjustments in the market. And I'll do another video on that to explain that. I'll be posting this, or I think I just posted this newsletter just about 10-15 minutes ago. So one of the things that stood out here is mortgage delinquencies. There's a lot of people that are needlessly delinquent. They're working, but they're trying to take advantage of this stimulus package with a forbearance agreement. Please be careful. We talked about forbearance. It's not that allowing you to basically skip your mortgage payments. It's basically saying, okay, guys, you can postpone them for 2, 3, 6, maybe 12 months. Once that duration is up, please be aware. You can possibly, depending on that agreement, have to make up all those payments in one lump sum. To make it simple, let's say they come in and say, you know what, Mr. Frio, you don't have to make your payments through the end of the year. Come January, though, you have to make your October, November, December, and January payment to bring your account current. Well, I'm just going to keep paying my payments now because I don't trust myself to save all those payments. I have to make one huge payment in January. Then if you don't, they can start foreclosure, just to let you know. So be careful. Okay, so let's get on to it. Today, I'm going to go over jumbo rates. Let me make sure mine is still active, just so I don't lose this. All right, so what I put in the parameters is a $300,000 property with a $200,000 mortgage with good credit, say a 740 credit score. I went to Guaranteed Rate, and they want you to call a loan advisor. Why? I hate that. I want to know, what can I do? Okay? So I go to the next one, and this one is Credit Union One. If you look up anything about jumbo rates, the first place that comes up is Credit Union One. So your assumption is they have the best rates possible. So we're going to scroll down. They don't give you really much detail. They go in here and say 20% down, 740 score, and some other things. $600,000 loan amount. When you go over that, many times they will jack up the rate. But that being said, let's just take it at face value and say their jumbo rates right now, we're going to go with a 30-year term. Their jumbo rate is 3.5% right here with 1 point. Okay, 1 point. So if you're paying, or if your loan amount is $2 million, you're going to pay $20,000 in points. Okay, so they have 3.5 with $20,000 in points. Well, let's just generically check. I put in best mortgage jumbo rates in California. I'm in Chicago, but we do a ton of business in California. So that rate came out the best one, and then no parameters asked. It's just saying it's 3.23. That's a darn good rate. All right. So now let's go through mine. So I'm going to compare these. I got a $2 million loan, $300,000 value. It's a purchase, 780 credit score. I go down through and I click submit. And then it pops up that all the what availabilities I have to do these loans. My rate right now, just so you know, right here, my rate is 3%, and you're actually going to get a rebate check back for $440. 3% with no points. You have here 3.23. Okay, I beat it. You have here 3.5 with a point. I clobber it. Guaranteed rates, not even on the board. You got to call so the salesman can try to talk you into it. So that's where I am today. I have the best rates, and if you can find something better, please shoot me the video or the link, and I'll put it up here. I have no problem disclosing. And I have all my rates right there. I got nothing to hide. So if you like what you see, the best way to get a hold of me is, my name is Dan Frio. You can give me a call or call in. I have 12 mortgage advisors. Love to help you. Just so you know, I go through every file with each one of my loan officers on a daily basis, so I know who you are, what you're looking to do, your credit scores, your mortgage rate, the program we're putting you into, and the fees that we're doing it with. If you want to call in, you can call an 800 number we have, 844-775-LOAN. That's 844-775-5626. If you have an estimate, you want to get the ball rolling. Here's what I ask most people to do. So when you apply for a loan, what we have to do is we have to give you one of two things. We have to give you a loan estimate if we started the application. And that goes over your rate, your fees, and everything. If we haven't started an application, we can do a second thing. It's called a fee worksheet. We just break it down to what we can do and what we can offer you. All right, so every company has to issue you one of those things. Get a second opinion. Send me your loan estimate. Okay, if you're already in the process of doing something. If you're not in the process, I'm showing you right here, especially with jumbos. I got the best rate there is. If you want to shop around, God bless you. But if you want to just get the ball rolling, just come to the website, apply now. I can almost guarantee within a half hour, you'll get a phone call from me or one of my advisors, and we'll start the ball rolling. No hard pressure sales. We'll just go answer any and all questions you have, give you what we can or can't do. And if you want to get moving right then and there, great. If you want to think about it a day, great. If you want to think about it a week, great. Watch though, because mortgage rates, they change every day, and that's why I do the daily rate update. So if you are in the middle of something right now or want to reach out to me for some guidance, what I ask you to do is email me. Again, my name is Dan Frio, so my email address is D for Dan, Frio, which is Frio, at preferredrate.com. Or you can just go to the website and click any of these buttons right here, apply now, get a quick quote or any of these, and funnel through the process, and your application will go right online. It's a secure system, and we can get the ball rolling right then and there. So now that being said, what I want to do is go over today's rates. So let's get to it. My jumbo rates today are 780 credit score, 75 loan to value, $1 million or more, 3% rate. APR 3055. Again, we just went through 4 or 5 different variations. That is the best out there. You can see, however, as your credit score goes down, just like any other program, your rate goes up slightly. So if you have a 760 credit score, your rate's 3.25. 740, 3.375. 720, 3.375. So let's go start at the top. Somebody did ask me if I would start putting in 15-year terms, so I'm going to put that in today on our conventional terms. If you're looking to buy a home or refinance just your primary balance to a different rate and term, this is where we're looking at, right up here. With a 740 credit score up to or at 80% loan to value means the loan divided by the value of the property. How you break that down in math. A $100,000 loan on a $200,000 property is 100 divided by 200, which is 50%. So if you have a $200,000 loan on a $200,000 property, you're at 100%. So you can figure out the math on that. So on my rates with a 740 credit score at 80% loan to value, I have 2.875 right now with an APR at 2.95. At a 700 credit score is 3.125. At a 660 credit score is 4.125. So you can see how your score plays a huge role in your rate. So when I went over something earlier, I said, when I went over that rate piece, and I'll show you that here in 1 second. When I went over this, when I went over the MBSs, I said, this is one of the biggest determinants of your mortgage rates, other than liability or risk-based adjustments, okay? So basically, your credit score is a risk-based adjustment. The lower your credit score, the higher the risk you are to lending, thus the higher the rate, okay? So again, purchase, if you're looking to buy a house, that's purchase. Rate and term, what we mean is you're just taking your current balance and changing the rate or the term on that current balance. You're not pulling out any money. Now, if you pull out some money over $2,000, it's referred to as a cash out. So my cash out rates are at 740 credit score to 75% loan to value, 2.99. 700 credit score, 3.375. 660 credit score, 4.625. Again, see how the lower the score, the higher the risk, the higher the rate. All right. So now let's get to my 15-year rates. 15-year rates, and the parameters are the same, but I just have different rates because the term is shorter, thus creating a little bit less risk and a shorter duration of the time that we have to lend you money. So a 740 credit score at that same 80% loan to value purchase rate and term is 2.375. 700 credit score is 2.375 as well. 660 credit score is 2.5. Okay, so again, it's not that big of adjustment. Cash out, now you're looking at cash out. Again, you're refinancing your current balance and you're getting more than $2,000 cash back in your hands. It's 740 credit score, the rate's 2.75. 700, 2.875. 660, 3.125. So those are all my, what they call conventional mortgage rates. So now we're going to get into the government-based loans. That's FHA and VA. So my FHA rate today, on an FHA loan, you can go up to 96.5% of the home's value, or in reference to loan to value. If you have a 740 credit score, my rate today is 2.75. 720, same rate. 680, same rate. We go all the way down to a 620 and the rate's 375. Still a fantastic rate. Most lenders right now aren't even doing FHA loans with a 620 credit score. Okay, so that's where I am on the FHA. This is, again, 30-year fixed. Most people, when they do an FHA or VA, they're going with 30-year terms. And then we go to VA, and my VA rates are exactly the same as my FHA rates. So, but on this, you can go up to 100% of the home's value. If you're buying a house, you need no money down. If you're refinancing, you can still go to 100% of the financing on a VA refinance. So let's think about this. You can get a rate at 2.75, and you could go up to 100% of your house's value and consolidate your debt. You might have a car loan, credit cards at 25%, student loans at 8 or 10%, furniture bills at 20%, or you can refinance and pay off everything you have at a 2.75 rate. I'm not getting you in any more debt. I'm trying to structure that debt to make sense for you. And then we already went over my jumbo rates, which are the best in the country. So that is it for today, guys. I greatly appreciate you watching. Like I said, I'd love for you to reach out to me. You got my email address. You have my phone number. And sometimes people say, dude, you're ghosting me. I'm not ghosting you. I work about 18 hours a day. I'm really not trying to ghost you. If you need me, please email me. Call in. I can promise you, you're going to get a call back from somebody. If you need me, I might relay it through them. I'm not trying to avoid you. I'm busy. Thanks to you guys. What I do want to ask you, we're about 40 people short of 10,000 subscribers. If you can help me there, I'd greatly appreciate it. How do you do that? Give me a thumbs up. Subscribe down below. Hit the bell so every time I do post a video, you get an alert. If it's something you want to watch, cool. If it's something you don't want to watch, don't watch it. But hopefully you find this channel educational. You can refer it out to friends, family, neighbors, coworkers. If you know a realtor that could use some advice or some guidance on the mortgage process, they should. You should know the mortgage process if you're a realtor. The more educated you are, the better you are for your clients. If you're a mortgage advisor, this is a great channel to watch. If you'd like to reach out to me personally to talk about, even if you're looking for a job and you're established and you just need some help, we're always looking for some really good people to take over the excess inventory we have in loans. So other than that, God bless you. Thanks a lot for watching. Please keep the comments coming below, and I'll see you tomorrow. Same time, same place. Bye-bye.